What's up guys, this is Sean and welcome to another episode of the iherng podcast, and today we will answer some questions from Instagram. This is from Mr. Donut. Hi Sean, please address me as Mr. Donut. Has been watching your YouTube videos for years now. I could miss out, but I believe you haven't mentioned anything about diversity. Diversity is important in stock market, but is it important in property investment? I bought a unit in Bukit Jalil, one of the units, right, 10 years ago for own stay at 400,000. Today I can get the same property at 400,000 or even lower price, and it can still fetch 1,200 to 1,400 in rental. I am 40 years old, single, employed, have enough cash flow to pay an extra loan if the investment is not fetching any rental. I'm aware that this development has aged and there are some legal issues, dispute in management, but overall this place is okay and I am confident with Bukit Jalil. Future development can benefit this area overall. By staying at the same residence, I can have less hassles running around maintaining it. I can also use the second unit for my own use in the future if I ever to get married, and I can stay close to my parents. Is there any concerns in getting investments in the same residence? Thank you. So first of all, thank you very much, Mr. Donut, for the email. Overall, in short, Mr. Donut is trying to get another unit in the same residence in the project that he lives in, right? So there's a few questions here. Number one, about diversity. So let's address diversity first. So every investment book or channel or personnel out there, right, will always teach you to diversify your portfolio, right? Which is like you allocate some into your properties investment, some into your stock market, some into gold, some into FDs, some into very, very weird stuff. That can also mean in a certain sector, for example, stock market, you need to buy at least 25 counters. Some teach like you only manage like 5 counters. Then in property as well, you can diversify either by location. Some you have in JB, some you have in Penang, some you have in KL. Or you can also diversify in terms of building type, which means you can go for residential, you can go for commercial, industrial, land, whatsoever. Because all those, right, will still have their own very individual behaviors. The main function of diversifying, right, is just in case if the market were to drop, right, it won't affect or wipe out your entire investment. That also means, right, there's a saying that goes around that you only diversify because you don't know what to do. So I've known people who buy 5 to 8 units in one same block, because if you are very assured that this investment will bring you a lot of money, right, of course you will go all in, but then the risk is very, very high, but the return can also be very, very high. Personally, almost all of my investments are in properties, right, and after investing like around 10 to 12 years already. A lot of people don't know this. I actually started off from stock markets, right? I started off from warrants, then stock market, then I went into gold a little bit, went into forex a little bit. But after seeing so many things, I think my behavior suits this asset class better because it's slower. It's really for people with patience, and I kind of have that lah. Then lately also because of quota issues, right, can no longer buy more. Need to cool off a while before I invest more, right? I've invested some into watches, I invested some into crypto, I invested in some virtual land kind of thing. Maybe we can make another episode for that lah, okay? Maybe we should really make that episode. Anyway, the next thing I want to talk about after diversifying, right, is the behavior of new buildings versus old condos. Every time there's a new building, right, what happens to the old building? Number one, the tenants will tend to move to the new buildings because all facilities are new. Number two, the price of the old building will somewhat be affected. For example, like when Twin Arcs was the only condo there, right? Wow, the rental was amazing. Then later when you have Skylux, when you have Park Sky, the second-hand value tends to drop a little bit, and it will need time for these two to and then balance off, right? And there's enough population that comes into that market. So this theory differs in terms of location because population matters. If you go into an area that is very high in demand, right, it wouldn't affect so much. But if you go into a location where it's really residential, not many economic drive, the effect is going to be more apparent. It's going to be very, very obvious. So for your case, if you were to choose the same block again, right, let's run the scenario lah. Okay, so let's say 400,000. Your money installment now is around 1,200, and you can say you can immediately break even. And this is what I tell people, like, it's not that difficult to find properties that can break even now because of the very, very low interest rate. So as long as you put in effort to really hunt for it, right, you can find exactly like what Mr. Donut shared. Again, scenarios If you were to buy, it's easier to manage. Definitely you can cover your installment and it's going to be super convenient for you to manage. Then if you were to get married, then your parents can stay in the same block. It's very, very convenient. Cool. What if, right, this 400,000 you buy somewhere else? Can this 400,000 make more in terms of capital appreciation or in terms of rental returns? Because the behavior for sub-sale as well as old apartments, right? I know some investors prefer, like myself, I bought an old apartment for my very first investment, right? The behavior, it's the rental rates, right, is very consistent. And there's a lot of own stay residents in the building as well. The only thing is that you might lose out in terms of capital appreciation because your investment will no longer have that sudden increase or spike in price appreciation, not like new properties. But the price will not drop as well because it's justified by your rental return. Let's say, right, if your rental were to be 1,005, right, you can easily sell at 450,000. You can even go to 480,000 because I put in 10%, right, and I take loan on that 480 minus 48,000. You take loan on that 432,000, right? You can still break even with the rental. So buildings like this will never drop in price because the genuine indicator, which is the rental price, is there to back up. This is like fundamentals for stock markets. So the performing rates around that area is that. Although there will be new buildings which is fetching 3,000, 5,000 in terms of rental in Bukit Jalil, right? They will always fall back because this is like the fundamental 1,003 to 1,005. So my take to you is this. Two questions. Number one, what is your risk appetite? Are you okay to work a little bit harder, do more homework, run more errands to get access to more deals so you can make use of that 400,000? Because I know certain projects that is new around 400,000 which can immediately break even as well. And that requires certain amount of hassle and work and effort and time. Or you just want, okay, I don't want a lot of trouble, I just want convenience, straightforward. I buy this, 3 months after I get the keys, I can immediately rent out. If there's anything wrong, I can just come over, different block only. And I'm very familiar with the management, I'm very familiar with the facilities. Everything is within control, within your circle of influence. So are you a person who needs everything to be in control, under your certainty, under your knowledge, or you like something that is off the chart a little bit? To me, almost everything in my life is off the charts. That's why I take a lot of risks, but then that is kind of mellowed down in accordance to situations like when you have a kid, your entire appetite will be different because you need to cover for your families and things like that. The main discussion here is now you find yourself a deal where it's almost certain it will break even or even make money. So for 10, 20 years down the road, even if the property don't increase price anymore, you will not lose out because the tenants are paying the loan for you. And that comes with the benefit of it might be very convenient in case you get married or you want to host your parents to stay with you in the same building. And this is why I like real estate a lot, because every decisions, right, are very individual oriented. It may make sense for me to buy a certain property above the market, right, because I live next door, right, or it's the neighbor's house of my parents' unit. Then a lot of this kind of personal preference, right, creates that demand or the rationale for them to pay way more just for a particular property. A lot of people buy this because it's my akong house. I buy this because it brings me back to when I was younger. Not everything can be calculated based on numbers. And I think that's about it, Mr. Donut. Thank you very much for the Instagram DM. I really appreciate it and I hope the best for you. It's either can you find a better deal than the deal that you have right now, or you can just settle for this deal. And the thing is this, if you were to settle for this deal as well, it sets you up for the next deal because this property can generate somewhat of income for you and it will not affect your DSR that much for your next investment if you want to do it. And I think that's super great. So a lot of people just accumulate this kind of properties and just let time play out. In 30 years time, all these loans are paid by tenants. A year I only work once. That can be your lifestyle, and this kind of investment behavior might be suitable for you as well. Okay, with that, thank you very much, Mr. Donut. And for those who still have any questions regarding real estate, do just email me at taniherng@gmail.com, or you can just DM me on Instagram, just like Donut, iherng, and I'll see you on the next one. Ciao.